All right, today is May 7th, and sadly, took another loss on the day. Bigger than I really wanted to, but it is what it is. Played BENF here for a listed first screen day. I tried playing it right out of the open, but cut it when it failed immediately. Rebought in here when we were reclaiming VWAP. Was super patient, but then it slammed, basically sold for break even. And then played it again later in the day as the volume dried up. We kind of neutralized down here, showed that we don't really want to go much lower. Started perking, and then I could have got out for break even, just lost $1,000 on the day, but I got bottom ticked here, which it happens, it sucks, but really the important things going forward is just to keep a good mindset, keep the positivity, even though I'm in a little bit of a drawdown right now the past 2 days. It's no big deal. This is a good time to really self-reflect, dig into the patterns, see what I'm doing right, what I'm doing wrong. And honestly, I did everything I should have been doing today. I just took a little too much size, really. But I'm going to start downsizing a bit, focusing on better patterns until I get my consistency back. And normally Mays are tough for me, the month of May. I don't normally perform well, but I'm going to focus on the best setups going forward. And really, that's my trade, but the key to this video lesson is reviewing past charts. I wanted to figure out why did BENF not work today. Sometimes, there is no answer, and sometimes you're just shit out of luck and a play doesn't work. In this case, this was one of those, but I wanted to say, how could I increase my odds with the listed first green day pattern? How do I have those big winners like I do on Verb and YYAI? And how do I capture the big winners like I should have the other day on MULN? When was that? Was that yesterday? Yeah, yesterday on MULN. Or capture bigger pieces and have higher conviction on setups. So I just went back and I'm going to go over, let's see, 1, 2, 3, 4, 5, like 6 or 7 of the last good and bad listed first screen days. And I'm going to discuss a concept that just kind of came up with off the top of my head. I'm going to call it volume matching, daily volume matching. And basically what this means is, well, let me pull something up like this. So daily volume matching. So I know that volume is a key component to runs. Volume equals life for a stock, volume equals spiking. Could also mean cracking depending on where we are in the pattern. But for a list of first screen day pattern where you're down so much off the highs, the more volume that starts churning in, the higher odds that we're actually going to spike at this point in the pattern. For example, the more volume coming in up here, higher odds we're going to start cracking. Once we start churning volume in here, higher odds we could keep spiking. So let me get into it. Daily volume matching. Just came up with it out of the blue. So the idea is that the volume, I would say around the first 30 minutes of the open or when the move really begins, should start having the potential, and that's the key word because we never know in trading what the future holds, but has the potential to match the prior day's volume. And I figured this out because I was just going through charts and I noticed that in this scenario where we have the potential to match or even exceed the prior day volume, those are the best listed first screen days. So in this scenario, BENF, the best day is probably going to be tomorrow because look, today in the morning, it really wasn't trading much volume. I mean, if we just look at this, 100,000, let's just call it 200,000 shares in the first 30 minutes. And if I use like a Stephen Ducks type of volume analysis profile, multiply that by 4 or 5, we were only going to trade like a million-ish, little over a million shares today. And yesterday we traded 9, 10 million. So on the daily level, this volume trumps this volume. There's no way we could match that 10 million on the day unless this was just an outlier play that did something nuts. So going into tomorrow, if we're trading the same amount of volume, 100, 200,000 shares, well, really 200,000 or more in the first 30 minutes of the day, if the play has triggered already ideally, then there is higher odds from what I've seen. I don't have stats, but from what I see on these charts that I'm about to go over, there's higher odds that the play is going to run. Then you mix that in with two other indicators, which is where is the previous high of day and is it red or green on the day. Those are really the three key things. So going into it, let's just go over Verb first from back on March 19th. We'll go over one that didn't work first. Perfect. So Verb was a big runner, had a big red day. So if I was looking at it just like this to play the next day, I would say this might be one in the future that I might just take off my radar because I'm saying, okay, it's going to have to trade, 20 million shares in the first 30 minutes just to match the previous day. We're going to be way away from the previous day highs, makes it weaker. If we're red, that's going to be even weaker. So we come into the next day, 319. Let me just load in like this. March 19th. And let's just go to 10 o'clock for the hell of it to just see the volume. Let me get rid of all of this over here and we'll go one by one. Shit, what ticker was it? Verb. So here we are. We are green on the day, which is good. That's a good sign. But here's the problem. Do we have the potential to match the previous day volume at this point? Trading 20 million shares? Honestly, I would say yes, but it's a yes, but here's the caveat here. The price action sucks. So if you have a lot of volume, but the price action is not working in your favor, screw it. If this broke out and continued to spike, and instead of being down here, we were, up at 52, I would say, shit, yeah, that's a really good sign. I'm going to stay in it. But I remember this one. It was just super heavy. And we were green, which was good. We didn't have the chance to break the previous day highs, though. And at this point, as volume's deflating, or price action's decreasing, kind of taking the air out of the name, volume's not going to churn as heavily. So I would say it's not going to match the previous day highs at this point based off of price action. Maybe I'm wrong, it comes back later. But let's go to the end of the day and see what happened here. Volume did not match. We traded, a fourth of the prior day's volume. You could have scalped it, but it really wasn't the best trade. And now let's just, it closed green, so I really wouldn't be playing it the next day anyways. Let's just see what happened. Yeah, well, it gapped down. It was red. Didn't have good odds to break the previous day highs. This is one that I'm just kind of going to scrap at this point. I don't know if I would even be, yeah, I wouldn't even be playing it at this point in the chart. It was just kind of one of those duds, but it was a good one to go over, one that failed. Let's go over LICY. This was between 326 and 328. Sorry if this is a bit confusing because I'm just kind of figuring this out and getting into this idea. But let's look at this one. So this was a big runner. Had a few red days on the way down. So on this day here, I would be writing on my watch list, potential listed for screen day, but it has to trade enough volume to be able to match, 16 million shares. That being said, I would need to see, I don't know, maybe 3, 4, 5 million shares traded within the first 30 minutes the next day. So if we zoom in to, let's just go to 945, see what the volume was like first. Let me just go like that so we could see it here. Oops. So we were trading 2 million shares in the morning. But again, you have to tie it in with price action. 2 million shares going down. Now, if we started holding here and recovering, I would be really interested. But now we're red. We were green, which is a good sign. So, I'm just going to fast forward this chart. This really isn't something, this is something that I did play, I remember, but it's just not a true list of first green day pattern. So we go into the next day. Let's look at the daily chart first. I say to myself, okay, can we match or exceed this volume? It all depends how much volume we're trading in the first 30 minutes, but of course, let's just look at the first 15 first. Just a few things were red, which is a bad sign. Do we have a chance to break that 99 cents today? Absolutely. So that's good. But intraday, right now with volume, we're trading 1 million shares. I don't think we're really going to exceed 15 million. Yeah, theoretically, this is the trigger to buy. So let's see how it would have played out. Would have played out morning spike. Nice move, but then just kind of failed and fizzled into the close, I think. Yeah. So now go back to the daily chart. Okay, we close red. Still trading some decent volume. Potential list of first green day for the next day. So we'll go into the next day. Here, let's just go into, I don't know, let's just go a few minutes after the open, 9:35, we'll start these. So we come into this day. One thing that's wrong, it's red. Oh, wait, I didn't go to the next day. There we go. So it is green on the day. That's a very good sign. I've noticed the best runners are green. Now the next key is we're going to need some volume. Can the volume match? We're going to need to start trading at least 2 million shares, in my opinion, in the first few minutes here to really start matching the previous day. And do we have a chance to break out of the previous day highs? If we get spiking and the price action goes in our favor with the volume, absolutely. I mean, right there already, that's a good sign. On LICY, I like this spiking, like this price action. Could have even nibbled some in right here. But now, look for a dip, look for something to buy, in my opinion. So would have had to probably chase the entry up here at 97. Now we're trading enough volume for sure. Once this loads, let it load. So yeah, we're trading 2 million shares. It's 10 o'clock. We could trade over that 7 million from the previous day, no problem, if price action stays in our favor. I would have been buying here. At this point, I'm throwing my risk at 95 and probably would be selling a piece into a parabolic. Oh, now it doesn't want to work. Well, for simplicity's sake, let's just see how the day ended. This was the real day to go for it. Again, it was green on the day. We had the potential to match the previous day volume. We had the potential to break the previous day highs. And, it was a nice first green day. I mean, you're risking, 5 cents to start. Once it really breaks out here, you can move your risk up to this level, even to 1, sell a piece. And then this is another thing that I want to go over, intraday daily volume matching. So once the volume starts decreasing here, as long as price action's holding up, it's fine. But once we get this fade off, volume really starts drying up and price action shitty, just cut it, sell it. You could always rebuy if the price action comes up on light volume and we get volume again. So I'm sorry if this is very confusing. I'm just trying to go through with you here, but that was one that worked. And yeah, theoretically, if we look at this daily chart, if it will load, theoretically, all those past 3 days were listed first green days, but there was a reason why this last day was the best potential list first green day, best potential to match the prior day's volume, best potential to break over the previous day highs, and opened green. Those are 3 of the key signs that I'm noticing on these plays that work. So let's actually go into one that did not work next. It's better to see what doesn't work sometimes rather than what does just work. So this was VVPR on the 8th. Let me just zoom in like this so we could just talk over it. So VVPR, big runner, had a red day here. This red day, would I have played it? No, it didn't volume match. It gapped down really big. It was red. I don't know if it even triggered that day. If we go to a 5-day, 5-minute chart. Yeah, I mean, yeah, this is not enough volume. It would have had to break out, churn volume, and then really have a strong breakout, 200, 300,000 shares, something like this the prior day. So yeah, I wouldn't have played that. The volume matching wasn't there. Let's see, it was 10 o'clock. And, we traded what here? Maybe, let's just call it 200,000 shares. And the prior day we traded 5 million. So theoretically, volume-wise, it sounded good, but we were also red too far away from the previous day highs, so it wasn't as great. So the day I want to talk about is the 8th here. So let me just zoom into that day. I don't know. Okay. So previous day traded 1 million shares. In my opinion, very easy to overcome that volume. So I'm really inclined to play this. Now you got to remember, if this was trading 100,000 shares, I wouldn't be trading it, even though it would be very easy to overcome that. The charts still have to show some sort of liquidity the prior day. Tim Grattani used to use $7 million worth of volume traded the prior day to call something liquid. I kind of use around 4 to 7-ish, Anything above 4 for me gets my interest as long as volume comes in and starts churning. But here, we had 1 million shares. Next day, we're gapping up pre-market. And, you could just see in the first few minutes here, we're green. We could break over the previous day highs. This is a great chart. This is, to me, an A+. And this is one where I was buying dips here versus green-red. It did come up. I added as it was breaking towards the highs. But this was one that actually just ended up failing. And that's okay. Stuff fails. If you have, I was buying here and here, you have a 610 average, risking 570s, 2,000 shares, and you lose $1,000. It is what it is. It happens sometimes. That's fine. Just fade it off. No big deal. So now let me go into stuff that actually works so you could understand more of what I'm saying. So if we go to CSSE on the 29th. So this one was huge runner, had a red day. This day, theoretically, it was a list of first green day, but just looking at the daily chart, you could already tell it was red. We had low odds of breaking the previous day highs, and the volume just was not enough to overcome the 16 million shares in the first 30 minutes. Considering it only traded 5 million on the day, we could understand that. Next day, though, we come into, we're gapping up, we're green, great sign, and we spiked right away on volume, started churning. This is one where you could be buying dips versus green-red. And I was buying dips versus green-red, but I really didn't understand this concept and how important the volume is. So I was buying dips, but I got out once it topped here. But the key here was it traded really light volume, yet held its gains. Now, if it cracked and really just faded on that light volume, you could cut it. But when something's churning volume like this, we break over the previous day highs, we have a chance to run. You could hold it or give it a second chance. You could be buying on these breaks with a higher risk. And it did end up spiking, going parabolic. Just knowing short setups, it hit that 50% short threshold where things start turning into short setups that are listed first green days. I no longer play that pattern anymore. But, you could sell a piece and then set a stop maybe down at 29. Yeah, it would have stopped you out end of day, but it is what it is. That's listed first green days. Could have set the stop here, at 31 when it broke this level. No big deal. It happens. But that's one where you could see it working, that volume matching the previous days. And we look at the daily chart, look at this volume versus the previous days and the corresponding spike. AIRE, this is one that I did play, but in hindsight now, I would have not even gone near it. It wasn't high enough quality. We were red on the day, gapping down. We weren't trading enough volume to break over the 5 million previous day volume. It was like a decent one, but not great. I mean, the morning we were trading 500,000 shares, so yeah, we weren't really going to get over that 5 million. It could have, but again, it was red on the day. Those tend to be weaker as of late. Then we could do Sizu. Actually, we're going to go back in time on 4-2. This was actually a really good one. One that I really want to go over and talk about. You see we had the big spike. Red day. Theoretically, the prior day was a listed first green day, but again, we have to say, are we going to overcome this volume? Are we going to break the previous day highs? The odds were slim. Of course, it could have worked and could have spiked, but there's a reason why it failed. The odds were slim. Coming into the next day, though, we opened and started trading some good volume right away. Let's see, in the first 30 minutes, well, you had to be buying before that. In the first 15 minutes, we were already trading 350, with pre-market volume, let's call it 500,000 shares, could easily get over the previous day's 1.3 million easily. So this is kind of like an A plus here. We're holding the previous day lows. We're green. We have potential to break previous day highs, and we're churning that volume where we could match or even exceed that volume. I was buying here, adding at 10, and selling right away into the parabolic. I said that's probably the best I'm going to get. Volume churned. We cracked. Volume declined intraday. And this, yeah, at this point, you're using this risk level and you're just selling and calling it a day. If it happened to come back later, you could retry it, but it failed. And this was a really good example. And just note how we were green. Yeah, gap down a little bit, but really it was green. We traded some good volume to start. Really got that breakout where the volume really came in. You don't truly know if the volume's going to be there, but sometimes you just got to take that chance. That's trading. You got to take a risk. But once it really came in, broke the previous day highs and halted up, that's a win-win-win. You could sell 3/4, hold a quarter of your position with the stop. At this level, you could even throw your stop here, wherever the hell you want to. But yeah, this is one that worked really well. And again, let's just look. It was green, potential to break previous day highs, and we matched or exceeded that volume. YYAI on 424. I tried it the prior day here and this day here. It was just kind of more of a mean reversion chart, kind of daily chart panic dip buy than a listed first green day setup, especially on this day, which is something I'm always willing to play. But on this day, the prior day, let's see if we could see that. Yeah. Let's go to a 5-day, 5-minute. It never really had the volume until right in here. It started churning, but the price action wasn't great. I did try it, but I sold it quickly as the volume dried up. It just wasn't a great one. What was great was the next day, because if we go over what I said again, we were green to start. We were trading some pretty good volume in the first 30 minutes where I said, okay, we could match 3 million or exceed, and we could definitely break the previous day highs and run. And that's exactly what happened. Oh, I still have my buys in here. I bought here, added, and then sold here, and then sold into the fade. Notice volume faded. Price action was holding, so I was being patient. But then we just were cracking, so I was like, screw it. I thought about getting back in here, but I didn't as volume came back in. I don't know. It just wasn't worth it for me. But again, we were green. We had that matching volume, that daily matching volume, and it ended up working well. And the reason that I started looking at this pattern, let's look at MULN. Let's clear. So MULN had a nice big run, 100, 200-ish percent, whatever we want to call it. Had a few red days. This one just trades good volume. It's always been a liquid name, so I always keep it on watch. And I was thinking about trying it on the third there, but if we zoom into the third, I mean, the volume was pretty good, but it just ended up failing. I mean, it was green on the day, volume was decent, but it ended up failing. This is one that just could fail and you cut it. I didn't even play it this day though. But then the next day, we had a gap up on news, and you could already see this is what I really mean volume matching or exceeding. Prior days was 3 million. The next day we had 26 million. That's where big, strong spikes could come. And this is the idea that I want to drill into my head when something's churning volume like this and really could exceed the prior day, break over those prior highs and is green. Big, big moves could happen. And I want to be there for these moves. So I actually had a great entry on this. I was in at 460s and I was selling at 476, which was just so terrible in hindsight. But using this volume analysis, I would be patient. I'll stay in. And this is a good one to explain what I mean by intraday volume matching now. Because look at all this volume. It was so consistent, so steady. It started drying up here a little. So this would have been the first warning sign. Maybe take a piece. But then look, came right back in, started even increasing here. So you could take a piece into the parabolic or take it all, whatever you want. I'm not the best with exits or anything, but just notice the volume. Again, we dry up, but look at us hold. We're holding, 80% of this move. Volume came back in. We did have this hard pull where I kind of thought it was the end, but a thing about secondary attempts, look at this volume. Dried up, held that support. Definitely could have been buying as the volume was coming back in. Look at it really fly in here through the high of day. Price action sustaining, sell into the close. That MULM was an A plus trade, and I said to myself, why am I missing these trades? How could I do better? How could I find them? So this is just a preliminary idea. It's a thesis. That's what we do as traders. We come up with a thesis and test it. And this is how I'm going to go forward. I'm going to focus on the best list of first screen days. And for me, those are ones number one above all that could daily volume match, that are ideally already green on the day, just adds extra strength, and that could break the previous day's high of day. If we think about it, what does that do? It shows that the sellers are gone, there's less supply, we have a chance to spike. And, let's go into my BENF trade today. Now that we have fully gone through and understood, hopefully, what I'm talking about. BENF, it was red to start. Bad sign. Could we volume match? We didn't have a chance in hell to volume match. Bad sign. Could we break the previous day high of day? Nope. Probably not if volume really didn't churn and it spiked. So why play it? We go intraday. Intraday volume matching. Volume was light, but okay, it came in. It was strong, strong, strong. But look, decreased hard. But the difference here, look at the price action, decreased and died. You don't want to be decreasing your volume and the price action's trading right back down towards the lows. Now, if the volume decreased, but we were still holding green and trading up here, I would be much happier with the trade and give it more time. But I cut it. Volume came back in here a little bit. I tried it again. Volume really came in again. I was really happy. I was up, good amount here. And then it just pulled on me. Again, we dried up, but we're trickling down. Price action's weak as we're drying up. And, it's 3 o'clock on the day now, and look at what happened. It's shit. Why bother? Now, if we look at this chart for my watch list tomorrow, I'm going to say, okay, if we're green, if we're holding these lows, if we're trading good volume in the morning, there's a good chance we could break over, if this trade, let's just say this trade's 2 million by the end of the day. If we're trading 500,000 shares in the first 30 minutes, there's a good chance we could volume match or exceed today, and there's a good chance we could break over the previous day highs. So maybe tomorrow is the better day to play it, and I was just so blind to volume analysis and the way these charts actually set up. So that being said, let's see how my idea pans out. It really gave some good insight, though, to the past 2 days, MULN and BENF. What I should hold, what I shouldn't. Sometimes they work. Sometimes they don't. But I noticed even on the ones that they really don't work on, you're not going to lose all that much. You're going to lose your normal expected, 1R, whatever that may be. For me, that's like 1,000 to 1,500. But I'm going to downsize a little till I get my consistency back. But really, it's going to help me focus on the best charts, focus on the ones that are green, focus on the ones that could match the previous day's volume, and focus on the ones that could break over the previous day highs. It just gives me better odds. And if I knew that now, last night I would have said BENF, unless this is really showing something special, like gapping up really hard to the sevens and trading 5 million shares pre-market, then fuck it. Why bother with it? So that is really that. Hopefully, this made sense. Hopefully it makes more sense going forward as I put it in my watch list, the daily volume matching idea. And, hopefully it helps me be a better trader and really master the listed first green day pattern better. Help me ignore the bullshit ones that aren't going to work and really help me focus and push size on the ones that will work. So let's see how it goes.